sheet that Andrea's holding. And I am going to read a little bit because his bio reads really fluidly, and I think that it gives you some useful background on where he's coming from. So, Dave is a financial inclusion and cooperative expert that has worked in over 70 countries advising financial institutions and governments. He's the managing partner of Dave Grace & Associates, whose clients include the Asian Development Bank, the World Bank, International Monetary Fund, the United Nations, the Gates Foundation, and others. His firm is focused on helping ensure that low-wealth consumers have opportunities to save and that their money is safe. This has led Dave to a variety of activities, including developing deposit insurance systems, writing legislation for credit unions, and developing the national financial inclusion strategies for Paraguay, Swaziland, and Azerbaijan. He is currently working with officials in Zambia, Kenya, Lesotho, and Myanmar to improve financial services for the poor. Domestically, he's also done some work launching credit union services, and particularly in a low-income immigrant context in North Carolina, and helped to establish the first ever global census on cooperatives on behalf of the United Nations. He has worked at the World Council of Credit Unions and was serving as a senior vice president there before he started his own firm, and was responsible in that time for policy development and representing credit unions before the European Union. He started out at the Federal Reserve Bank of St. Louis after graduating with a master's degree from Washington University in St. Louis, and before that, obtaining his undergraduate degree in economics and international business at St. Louis University. And he speaks Spanish and has also lived in Spain and Italy, in addition to the places I referenced for his work. So, with those wonderful accolades in front of us, I now am really happy to introduce Dave, and he's going to tell us about his work and some thoughts for you. So thanks so much, Dave.
Thanks, Mary Beth. So good to be here. Thanks for coming this afternoon during your lunch hour to sit and listen to me and get some extra credit for class, hopefully, too. Right? So I wanted to start with a little bit of a story about Felicis. So I was in Malawi and traveling around and working with credit unions, which are a type of financial cooperative in Malawi. And I met Felicis. And Felicis was selling some mangoes in the marketplace. And I started asking her about her borrowing and savings habits. Now, I happen to know that she was one of the very few people, about 10% of the people in Malawi, that actually had an account, either at a bank or a credit union. And so this already made her a little bit different than most people there. But she started to tell me about how over a period of time she had taken small loans and grew her business a little bit, and most importantly, saved. Okay, so she saved that money bit by bit, and eventually she got herself a little bit better spot in the marketplace. So, if you've ever been in a business class and they talk about, what's important, they say 3 things are important in a retail shop, right? Location, location, location. Same thing's true for Felicis. So Felicis got a little bit better shop and stand, and she was able to grow her business, and she was really excited about it. So I asked her, I said, well, how much do you have in your account now? So she dug through some stuff, and she pulled out her passbook. Now, you don't know what a passbook is, possibly. Any of you have passports? Hopefully you have passports. That would be a good thing, because it means you're getting out, traveling, seeing the world. So a passbook is about the size of a passport. And it's what people use to record the transactions into their account. So she pulled it out, and she could show me how much she had in there. She was very excited that she had saved, over several years, $16, like 30 cents or something like that. Okay? And what was so interesting was how thrilled she was, how she felt so much more secure for herself and her family because she now had savings. She never had that before. Even though, in our context, $16, right? What did you guys spend this weekend when you went out, right? Anyone spend more than $16 on Saturday, right? So, she was able to save that amount. So, that is ultimately what I'm trying to do, and probably what you're trying to do too, right? Maybe at a different level, you're hoping to work in some area where, whether you're helping a Felicis type person or somebody else, but help people accumulate assets and grow their wealth. right? I mean, that's probably why you're sitting here and interested in it today. So I'm going to talk about those three things today in a little bit, these three different areas. First, I'll talk about what I call the nexus of financial security and international development, kind of where those two meet. Then I'll talk a little bit about trends in international development. And last, how to get jobs in international development or in the areas of finance. Feel free to ask questions at any time. You know, I was in your shoes at one point trying to figure out what I wanted to do, what I was interested in, how to get into a field. And these are all just different data points that you're taking in, right, over this as you're going through school. And then we'll have a Q&A to ask questions at any time. All right. So what's the status right now for what's called financial inclusion? This concept of financial inclusion is really where financial security meets up with international development. And financial inclusion is generally about how many people are using the formal financial system. Now, does everyone here have a bank account or a credit union account? Yeah? Anybody not have one? Maybe you wouldn't raise your hand if you did. I get that. But, so, globally, about 2 billion people don't have a bank account. And there's a lot of work, a lot of money by the Gates Foundation, a lot of effort by the heads of state of the 20 most powerful countries in the world, including the U.S., a lot of work by the World Bank, who I spend a lot of time working with, to try and change this figure. Because there's a lot of evidence that even just having a bank account, that one simple thing, of course using it helps too, but it's steps, right? But having a bank account is a great indicator of your ability to get out of poverty. So there are a lot of people in poverty around the world, right? There's a lot of people in poverty in Madison. There's a lot of people in poverty in Wisconsin. And so to help people get out of poverty, having an account is oftentimes one of the first steps there. And we'll talk a bit about it. This map here is taken from the World Bank, and it shows the red colors are where people don't have an account, right? This is where less than 20% of the people have an account, and the brightest green would be where more than 87% or more of the countries, people in those, adults in those countries, have a bank account. And, this is broadly similar. If we put up a map of levels of poverty, people living on less than $2 a day, and overlaid these, they would be essentially the exact same map. Okay? So it's not much coincidence on that. And so what you see is very high levels in the US, Europe, Australia, a lot of these countries about where people have accounts. Yes?
I'm just curious, in some of the most impoverished countries, how accessible are banks?
Right. Yeah, great question. So how accessible are banks? Do we just need to put branches there, right? Just open up branches. And the answer is it depends. It depends. So in some countries, banks are really accessible, and there are a lot of them around. And in other countries, they're not very accessible. The key thing, what millions, for probably billions of dollars right now. Actually, billions of dollars in research is being spent right now on moving towards mobile financial services. And if you want to, I've gone to the grocery store in Kenya and purchased, I go into the store, I pick out my bananas and my oranges and my granola bars, I get to the line and I send a text and I pay for it and I leave. Okay? You can't do that anywhere here. Okay? Apple Pay kind of, but what do you have to have? You have to have a bank account, or you have to have a credit card already, right? To tie it to it on the back end. The U.S. is not nearly as advanced with mobile financial services as this part of the world. The most advanced places in the world right now on mobile financial services is there. So to get to your question, a lot of thought is going into, well, could we change this idea here, right? Instead of building bank branches, which is kind of old school, takes a lot of money, really expensive to staff. Why don't we just turn our phones into our banks? Everyone in the community here is trying to do this now, right? I mean, they're all fighting for each other. Google Wallet's trying to get in. Facebook, they have some ideas on mobile financial services. You know, Apple's trying to get in that space. The banks are trying to get in that space. And if you were to go and look to other countries too, right? All the banks in Peru just came together and launched something cooperatively. You know, banks working together on the back end to jointly? Yeah. Because they know that there's about 6 billion of these things around right now. Well, about 5 billion of these things around right now. And they're growing really, really fast. So it's going to be much easier to establish accounts, possibly through this. So, what else improves financial security? So these are some of the things that we know improve financial security. First is confidence in the financial system. So secure institutions. So you all may take this completely for granted because does anyone really worry that their money in the bank account isn't safe? Maybe you do. If you have less than $250,000, you don't need to worry about it because there's something called deposit insurance, which means if your bank or credit union fails, closes doors tomorrow, as long as you have less than $250,000, the U.S. government guarantees that you'll get that money back. And quickly. Many of these countries here, they don't have that. Or they've just put it in place and it's not really working yet. And so I find, so about 2 years ago I was sitting out in a hut in Lesotho. It was a credit union, but it was also the place where they stored all of the grain. So we were sitting on bags of grain instead of nice comfy chairs with cool backs on them. And so I was sitting there and I was asking people, I said, well, why don't you use your credit union? They said, well, we remember that institution that was here about 20 years ago. I'm like, well, what do you mean? I said, well, the guy came and he, took everyone's deposits and then he left. And, I never got my money back. The woman who had $16, well, she lost all $16. It's gone, vanished, the guy's gone. And I find that this idea of confidence, people have a really, really long-term memory about problems. They will remember this financial crisis that we went through, 10 years ago or whatever. That's going to affect people and their savings and borrowing behavior for a really long time. Even still, the levels of debt in the U.S., right, they're much lower than they were pre-crisis because people are still concerned about that. So the first thing you have to have is security in institutions that if you put your money there, it's going to be safe. So I spent a lot of time on that issue. So you have to have a place to save, okay, that you can put the money at the right time. And then also last, what improves financial security is this idea of creating slack in people's financial lives. Has anyone read the book called Slack? No? There's a really incredible book out called Slack. It's written by a behavioral economist from Harvard and a behavioral economist from Princeton. And it looks at this concept of slack in our lives and how it affects us. And slack being, do we have a little bit extra space in there? And what happens when we have a little bit extra space? And that can be mental space, right? And the authors tie it all back to poverty, that it's extremely hard to get out of poverty if you're concentrating and fixating on the problems that are in front of you right now. So if you're concerned about dinner tonight, okay, and yes, you're trying to figure out what you're going to have for dinner, but I mean, like, if you can afford to eat dinner, like, really, are you going to have dinner tonight for yourself and your kids? If you're at that level, it's incredibly hard to think about other things. And I would act the exact same way that other people do, you know, if I was in that situation. They do all kinds of behavioral economist experiments and this and so forth about creating slack, and that can be mental slack and time slack or whatever. Financial slack is what I'm thinking about, is a really, really important concept. So the Center for Financial Security here, they do a lot of thinking about this concept of slack. They may not call it that. I don't know if you call it that in your personal finance class, but it's a huge issue in the developing world and in the developed world. So when I think about slack, I think about, do people have a little bit of money set aside? So whether it's Felicitas and $16 that she now has set aside, or whether it's somebody in the United States and do they have $2,000 to cover an emergency. But the World Bank asked this as well about adults in developing countries, and they found that 74% of people can come up with emergency funds equal to 5% of their annual income. All right? And 28% of those adults would use their savings for emergency funds. Okay? So, you know, written a flip side is 26% of people, they could not find money through relatives, through borrowing, through anything to cover an emergency. Right? Now they break it down because these World Bank types, they don't say $2,000 because then you have to index it to inflation and currency conversion, you know, whatever. So they just say 5% of annual income. If we were to flip that to the United States and take that same idea of 5% of annual income, it's about $2,000, depending on what you call median income and all that stuff. And Pew Charitable Trust did the exact same kind of survey. And they found that 41% of adults in the United States did not have enough liquid savings to meet an emergency. So do people here have slack? Right? 41% of people don't have slack. Now they may have something else. Maybe they could, I don't know, sell other things that they have. Okay? Besides, do you know what liquid savings is? Can somebody, you're in personal finance, you should be able to tell me, what's liquid savings? Somebody give me a definition. Yeah.
Easily transferable.
Right. Like what?
Checking account.
Right. Yeah. Other ideas of liquid savings? Besides checking accounts? So I just got back a week ago from Myanmar. Their liquid savings is this right here. Gold. For real. People, I find this in the markets with the least developed banking systems. Suriname, where I was trying to set up a deposit insurance system. In Myanmar right now, where 6% of people have an account. And I'm working in a rural area to try and set up, you know, some institutions. And we're trying to figure out how do we get people to save in liquid savings. Because right now, they save in gold. Even really educated people there. So I was working and traveling with this woman who has college education. She has a great job in Myanmar. And she was working for Save the Children, an big international development firm. And she was saving up to buy a condo. She saved $70,000. Okay, to buy a condo. She saved all that $70,000 in her mom's house in gold. When she'd get paid, she'd go, she'd buy a little bit of gold and stick it in there. I asked her, well, weren't you concerned about the gold? You know, the safety of it? No, I wasn't. I said, well, how about your mom? Oh, yeah, every time mom left the house, she had to find somebody to watch it. And she couldn't be gone for very long. She always had to, you know, you watch the house now, and then you have to go somewhere, and then he'll come in and watch the house, and so forth. So, you know, two things about using gold, okay? One is that, yes, you can convert it, but it can get stolen. The other thing about it is, in Myanmar, okay, if we think big, you know, a lot of you are personal finance, but if you, anyone take econ? Yeah? You all take an econ, macro econ, right? thinking big about financial systems. So that $70,000, okay, that my friend Sandar had in her mom's house, that really hurt the economy in Myanmar. Right? We just had these elections. I don't know if you saw any of that on CNN and people running around. So Sandar, her $70,000 sitting in gold meant that nobody could borrow against that. If that money was sitting in an institution, then that bank could take that $70,000 and they could lend it to somebody else. Right? Either as one lump or something else, and then that person would go and start a pizzeria or whatever they do with it, and the economy would grow. But when the money's just sitting at home, it doesn't get leverage. Okay? So anyways, the point of these two slides here are that the idea of financial security, how we measure it, what we think about it, even the numbers themselves, really aren't that different between the developed world and the United States. Okay? A lot of the concepts and the ideas about how to get people into accounts are very similar. Somebody just walked in the back a little bit ago, a colleague that I work with, Lily Tangwell. She works here on campus at the UW Center for Co-ops, and I've worked with her for about a decade. She does a lot of this kind of stuff and has over the years about trying to get youth involved. Teenagers, people your age, etc., into financial accounts, using credit unions and so forth. So if you have questions as we get to that, she'll answer that as well. All right, now I'm going to switch and get away from this, my day job of what I do about this stuff and talk a little bit more broadly about international development. First, this picture here, the guys in these Hogan's Heroes helmets, right? These World War II helmets. So these are people 2 weeks ago, two gentlemen wearing longways, men's skirts, in rural Myanmar, and they had just gotten a loan for their credit union from another credit union. And they were going out to then give the loan. And that thing that they have in the yellow bag is not a body, but that's actually cash. So one guy is going to sit on top of the cash, and the other guy is going to drive the motorbike. That's how money moves in Myanmar, okay? That's not how money moves in the United States. If money moved like that in the United States, our economy would grind to a halt really, really quickly. But that's the level of where they are in terms of money management and so forth in that place. All right, so what do I've talked a little bit. So when you think about international development, what does it mean? Okay. I don't know if you're interested. You have to be interested in international development a little bit because you're sitting here today instead of at lunch. So what could that mean? So these are some of the things that I've done in the past and are working on right now. Could mean helping write a law in a country for financial cooperatives. It could mean working and training regulators and the institutions, microfinance institutions in a country. Could mean doing research on mobile money. So I talked a little bit, the great question about, do we just build banks? I said, no, we do mobile money. Well, how do you get people to have confidence in mobile money? What if you told people that you could have 250,000, maybe a smaller amount, but let's say you can have $2,000 on your phone, which is a limit around what they have in a number of countries. And if that firm, because oftentimes it's a telco like Verizon, imagine if Verizon or T-Mobile or AT&T was your bank. That's what's happening in these places. So what if Verizon goes belly up? What happens to my $2,000? Well, what if we give that Verizon deposit insurance? But they're a telco. So these are all the things, we're trying to figure out. And meeting with deposit insurers, so like the FDIC, have you learned about FDIC? Yeah? Your personal finance class? Yeah? There's one for credit unions as well. This is a test question. What's the regulator and deposit insurer for credit unions? There's a prize for this. I don't know what the prize is yet, but it's big. Can anyone tell me? Yes. The NCUA, yeah, there we go. National Credit Union Administration. So they also do up to 250,000 coverage. And then also working on things like developing national strategies with governments for how to improve financial inclusion. So how do they get their banks and telco companies and regulators to all work together to improve these things? What else is happening? What do I see as trends in international development right now? So I mentioned this because as you study, as you think about your classes, as you go to interview in a year, 6 months, or 2 years, right? If you can be involved in or know about double-blind studies. So double-blind studies is like if you were over in med school, you know all about this, right? Pharmaceutical trials where you give somebody a placebo and you have a control group and then you give them some intervention and then see what's the impact. Well, that's now the craze in finance as well, in a lot of areas to figure out what's really the impact of these things. Ideas from behavioral economics. If there's a behavioral economics class, take it, right? Go read the book Slack, write a paper on it, do whatever, right? Really useful things right now. Mobile money, we've kind of talked about this to expand inclusion. And then the other big trend right now, I was talking to somebody at the International Monetary Fund, and when all of the central banks got together recently from around the world, which they do twice a year, everyone was talking about currency devaluations. What's happening right now with the price of oil. For some countries, the US dollar keeps going up and up. So in all these other countries that may buy goods in dollars or have to purchase things, it's really, maybe they borrowed in dollars. Now they have to repay in dollars, okay? But their currency is worth, only 70% of what it was before. So right now, there is no bigger issue in some economies than currency devaluations. So these are some hot things going on in development right now. Working in development. Has anyone here ever traveled to a developing country? Yeah? Where'd you go?
China, does that count?
Yeah.
Pretty much most of Africa.
Well, nice. Other place? Yeah. Guatemala? Love it. Yeah. Antigua? Yes.
Malaysia.
Cross over. Uruguay it's the first country in all of South America to now be considered upper income. They're like dancing in the streets because, from like a development perspective, they feel like, yay, we're no longer this, backwater continent. So it's just transition. So working in development, sometimes people think, oh, that's so cool. You go out to these rural places, and other times people think, oh, I gotta always be concerned about humanity, and I hear that there aren't really good wages, and is it depressing, and all these things. Well, sometimes you can take a break and go play soccer with a bunch of people too, so you can have fun too. People that want to work in international development, like when I hired the woman in black there several years ago, she could speak more than one language, and that was useful. The fact that she could speak 5 languages was even more useful. But I wouldn't hire her, I wouldn't hire anyone. So hopefully none of you are language majors, because I'm going to poo-poo it a little bit right now. Just my perspective, if you want to get into international development. All the time you spend about a language, spend it in building an expertise, okay? I don't care what that expertise is. Statistics, computers, accounting, marketing, okay? A language alone, if you want to get into international development, I would not hire Liliana, right? If she came to me and she said, Dave, I can speak fluent Romanian, and French, and Russian, and So so you can talk to lots of people, but what's the skill set that you have? So I think it's really important to think about what skill set are you building, right? I mean, you don't have to, you're not gonna, no one expects you to be the global expert, okay, when you're 21 and something, but just start to build an expertise in something. The other thing is, and this is true for any job, be willing to pay your dues. Mary Beth read my bio, and it sounds like I've done lots of things and so forth. My first job was at the Central Bank in the United States, counting frickin' candy bars. Okay? That was, I was in this management development program, and I rotated through and so forth. But I got to count the candy bars one time at night. Right? So, yeah, I had done, and I had gotten the degrees and so forth, and I got a job counting candy bars. So, be willing to pay your dues. I didn't quit when I got assigned to do inventory of the vending machines. It's like, what's inventory? I know the word. How does inventory work? Maybe I could learn from this instead of being ticked off that I was counting candy bars at 11 o'clock at night, right? Recognize you're going to start as a volunteer, as an intern, doing some study abroad thing. Just go and be involved, all right? The other thing that I did not add on here, and I should have, is be persistent, right? Not persistent, but persistent as hell, okay? That works. Find that, borderline of being annoying, okay? Don't be annoying. But be persistent. So the other thing, if you want to work in international development, just a reality is that it's probably not going to pay what a big bank pays, all right? If you want to go and work for Chase, downtown Chicago or head to New York or whatever, it's not going to pay what that does, depending on what kind of thing you can do. You can earn a living and do well and so forth, but it's not the same as pharmaceutical sales or some of that. But I also know lots of people, in fact, that have gone and they've worked at big banks, and then they come back to international development. Or, but it all depends on what you really want to do. The other thing is, just if you're interested in the World Bank or IMF, they're not going to hire you out of school. I don't care if you're 4.0, I don't care if you're valedictorian, you're not going to get hired by them. Maybe you can get an intern there, okay? But I find most people there, you need 5 to 15 years of experience, okay? So I'm just level setting a little bit, okay? Maybe it's going to be counting candy bars at the Federal Reserve, and then maybe you can do it. And the other thing that I want to mention is that co-ops rock. As you think about different things, Wisconsin is a great community for cooperatives. There are a lot of really great cooperatives. I'm biased. I love cooperatives. I'm involved in them. I'm on, full disclosure, I'm chair of the finance committee at Willie Street, so I've worked with co-ops for a long time. But they're a really neat institution that is a nonprofit owned by the community, but yet has a business purpose as well, and is kind of a neat influence and confluence of social development, community ownership, and yet business principles as well. So I'm going to end it there and take questions, and I have some questions for you as well. So, questions at this stage?
Have you seen development of co-ops across borders yet?
Co-ops working across borders?
Yeah, across countries.
Yeah. Some do. There are very, very few that do. There are some really big cooperatives too. In the agricultural industry and so forth. But if you look at finance, very, very few financial cooperatives work across borders. Where? So, in Europe, there are some very large cooperative banks in Europe. Rabobank is one, Raiffeisen Bank. If any of you have been to Europe, a lot of the banks you've seen there have been cooperative banks. In New Zealand, they have some of the biggest cooperatives in the world, and they're heavily involved in exporting dairy products and so forth. So. Yep. Yes.
So in reference to you talking about the mobile, I guess, kind of banking system they have
Yep.
in other countries, so how does that work as far as if I have $2,000 and I want to put it on my mobile bank account, where do I deposit that so I can spend it at the grocery store, for instance, or how does that process work?
So yeah, how do you, if you've got 2,000, how do you get it onto your phone? So because most countries have a pay-as-you-go process instead of contract process, there are thousands and thousands of people. These could be little coffee shops, little people in, like that woman Felicis, right? So that was Felicis a couple years ago. Felicis now probably is also an agent for mobile money. Okay, so you would go there and you could top up your airtime, and when you top up your airtime, you could give her cash too, and she would put the cash on your phone. And right away, before you leave her, you would get a text message back that money has been added to your account. Okay, so physically, you still have to go somewhere and put cash on it. But literally, there are, 50, 100,000 of these agents in a country. Much smaller, like the size of Wisconsin, okay? There were 100,000 of these agents in Wisconsin.
So if we have like the FDIC to insure our money, say for instance someone's phone gets lost or something, are they able to retrieve that, get a new phone, and download whatever an app or something, and they'll have their money back, or is it's gone if you like lose your phone or drop it in water or something?
No, so I mean, usually it's not tied to your physical phone, okay? So you have an account outside of that, but the phone, you have a password on the phone, and then to get into your account, you have a password as well. So there's 2 levels of passwords there. But I could hold you up, and I could rob you and tell you to give me your account and transfer the money to me and so forth. So there's still that piece. But it's more the FDIC is, what if you'd imagine Verizon was your bank, okay? And trust me, Verizon, AT&T, and T-Mobile, they'd all love to be your bank, and they all probably have programs working on this. There's regulatory issues about it as well, but if Verizon were to collapse, if that company were to fail, and you have $2,000, then FDIC could maybe make sure you get your money back. I know these are kind of odd concepts because we don't use our phones that way.
So in like domestic financial capability work, right, a lot of it is helping to connect people's goals and aspirations to like their behaviors and working through a lot of that. And obviously a lot of the work that you're doing is on kind of building that infrastructure, right, and making sure that there is a safe place to do some of that transactions. I mean, do you find that when the infrastructure begins to be built out, do people naturally kind of migrate into it, or are there still some of the same kind of behavioral finance issues that need to be addressed in helping folks to think beyond just subsistence or kind of the value of saving and that sort of thing?
Yeah. Great question. So how do we get them to that next step, right? Once the infrastructure is there. So I think, and this hasn't been proven, I think everyone innately wants to save. Okay? I think if we go back, into kind of our, back when we were cavemen and women, right? So, I mean, if you killed something, you wouldn't want to eat it all right then, would you? Right? Because, what if you don't get something tomorrow? So you'd want to save some of it. So I think I haven't met anyone who says they have no desire to save. And when I go around and I meet with people and I say, would you rather, which I did 2 weeks ago, and I asked a group of very poor women, would you rather borrow or save? Save! Emphatically. Now, how to meet their goals and how to get from what they want to do and so forth, I think that's still a process that has to happen.
I guess maybe to kind of fill out the question a little further, like it seems like access to financial instruments eventually kind of breaks something down in the way that people think about money, right? And that, in America, maybe people do want to save, but then they go through 25 years of working and don't save money, right? And so how do you, yeah, I guess I was wondering if you saw parallels between kind of some of the problems that we see with, financial security in America and then, in the international context. It seems like it's less of a problem in some ways. You just create the opportunity that then people naturally want to take advantage of that ability to save and create security.
I mean, it's some of the same ideas where, if you can get the money directly deposited in here, right? People say the best way to save is to never touch it, right? If anyone here had a summer job or whatever, the money gets transferred into your account, right? And if you really want to save, have money like directly transferred from that account into another savings account. So you don't have to do it, right? So that we can be lazy, because we all like to be lazy, and it automatically happens. So that same idea of making sure that it's easy and that it happens. This book Slack talks about making sure that farmers in Kenya, they have savings accounts so that when they sell their crop, they have the account right there at that time, or even the payments go into their account automatically. It may be a guy on a motorbike with a big yellow sack that puts it in there in the background, right? But yes, to make sure it's done automatically.
So how do you build confidence? You said that was an issue. How do you build confidence so that people are willing to use mobile banking or whatever kind of financial institution is available?
That is a really hard question. So the way you build confidence is making sure that failures don't happen. That's the first thing, is that if there are failures, people get their money back, and that you take steps to intervene before failures happen. So that's oftentimes about licensing appropriate institutions so that there aren't pyramid schemes, making sure you take early actions, and having the government really follow through on those things so that people believe in them. So those are some of the baseline requirements, and then those next levels, I think, are about, whether it's financial coaching, right? I mean, the center here does a lot on coaching and getting out into communities and encouraging people and talking them through that process that it's there. The last thing, I think, is making sure that people can get to their money. So imagine if you had if you got paid, all right, you have a job, you get paid, it doesn't go into a bank account, it goes to your phone. What would be the first thing you would do after you were supposed to be paid? You're paid on Friday, it's supposed to go into your account, what are you going to do?
Make sure it's there.
Check your phone, yeah. Right. I might even go and buy something. If this was a new instrument I had, I might go buy something like really small, like a pack of gum, just to is it really there? I see it's there, but I want to buy a pack of gum to make sure this really works. So I find that sometimes people will go and they will deposit, like that woman Felicis, she might deposit money into an account. The next day, she'll come in, she'll withdraw $16. The day after that, she'll come and she'll deposit the exact same $16. She's not crazy. She just wants to know if this works. And she's totally rational, right? She's not a backwater woman in Malawi who's uneducated, all right? She's doing exactly what I would do, which is, does this really work? So having the, liquidity available that people can get in. I have a question for you. What is your biggest concern right now about your own personal finances? And then I'm going to ask, what's your biggest concern about the global economy? So I don't get to talk to bright young people from college students all the time, so I hear things, but I'm interested in your views. So what's your biggest financial worry for yourselves right now? Yep.
How fast we'll be able to pay off loans.
Okay. Anyone else? Yep.
Transitioning from parents' money to your own money.
Okay.
Good building credit.
Building credit.
I'm an impulsive spender.
Impulsives. Okay. So that's your worry, is that you know that.
Yeah, and then I won't save enough to guarantee the future.
Gotcha. Building credit. Yep.
Saving for the future, because I know a lot of costs, these rising costs for the future.
Yeah. how much does life cost too, right? I mean, like to your point about, transitioning from parents' money, building credit, paying things off, how much does it cost to live? That was one thing I never quite knew. How do all these things add up? All right, now, anything else about that? And then the global economy. So, anyone, students or not students, what are your concerns now about the global economy and where things stand? Maybe you don't know. I'm just curious your views on it. Yep, and that.
Interest rates.
Interest rates? What do you mean by that?
Market fluctuation in interest rates and how it affects trade.
Okay.
Other countries want to be like us, so they're consuming the same amount or trying to consume the way that we do, but there aren't enough resources. And it's important to manage our resources properly, so I'm worried about the amount that America is consuming too.
Gotcha. How does all this consumption add up?
Also cybersecurity, since everything's done online now. And obviously there are cyber hackers and people going into the government and stuff. The internet, so I guess that's a problem.
I met on Monday with credit union regulators from around the world, from England and from the US and other countries, and their number one thing that they're concerned about right now is that cybersecurity. I talked about how I'm going to knock this guy over the head later and steal his phone, right? I mean, but not much money really gets stolen that way. I mean, that's like low-level crime. So I take 2,000 there. If I want to take 2 million, I don't want to do that. I want to go that way, right? And that's where you can really have money. So there's a lot of concern about that. Other concerns about global economy? Oil, import and export? Yeah. I'm working in Azerbaijan right now. 95% of the country, its economy is based on oil. Oil was at $100 a barrel. It's now at 27, 28, whatever it is, right? Yeah. They have incredible, incredible problems there right now. And we don't know, it's just going to take time. They're asking, how about if you give us loans, but you give us loans in manat instead of in dollars? Well, none of the global financial institutions want to take that currency risk because they've had, the currency keeps going down and down in value. Yeah.
Oh, I was just going to say, a lot of people I know have gotten hit hard in 2008, so kind of another situation like that's happening.
Yeah.
Where just making sure that you're investing in the right stuff, and people have a lot of concern, and that's still in their mind when they're making investments and stuff.
I don't know what kind of data you all look at in class, but Americans have gotten much more conservative as far as where they put their money. Right? A lot of Americans are having money in CDs, which earn 0.4%, right? Not even, right? They've gotten really, really conservative in their investments. Maybe too conservative, right? Because we're going to live a really long time. But I talked about how we have a long-term, we remember problems for a very long time. Any other questions? Mary Beth?
I have one. This is kind of the SOGI-wide perspective question. So we talk a lot in our engaged research here, the way that we look at community ecology. We talk a lot about the theme of, really having a two-way street when it comes to working in research or programming with communities. Mm-hmm. So the university perspective that I'm talking about is kind of if we're going to do a project with the community, it's really important, not only on principle, but also for outcomes, that we engage community members properly where they have as much of a voice as the, quote, experts or researchers or leaders of that project. And I know with the Center for Financial Security, a lot of the work is happening with community partners in communities in the U.S. especially, where they have a finger on the pulse of people and their real needs, and that's kind of the spirit of CFS research. It's not just about top-down policy in a vacuum, it's about really understanding what's happening in households and families. And we take that out in many other contexts here. So I'm wondering, in the context of international development, Obviously, there are leadership organizations like the ones that you've done consulting for. Can you talk a little bit about how you do that and you provide global perspective and leadership, but in places where you also need to properly engage the community and their specific, unique perspectives?
Right. So, yeah, how do you engage communities to make sure that it's relevant and appropriate? So that is a really important thing that people talk about and aren't very good at. I find. Especially, outside of a capital city, outside of, an educated class and so forth. They do a lot of survey work. Okay, so they try to do that in a rapid and inexpensive way by doing survey work. And good survey work too, where they'll go in and do, for example, a national financial capability study. Very common about, what do people know? What do they not know? So that's one way, but then how do you get down, maybe what you were talking a bit about, how do you then help move people on a one-by-one basis down that path? And that's a much harder thing to do. I think that takes, certain kinds of institutions. Some of the things, the cooperatives, so a cooperative which is owned by its members, it doesn't have to make a big profit. Any money that a cooperative makes, if you think about its balance sheet and it has net income, if it has extra money, you know what it does to it? It gives it all to its clients. A bank, when it has net income and makes money at the end of the year, what does it do? It gives it back to its dividend, to its shareholders, which is a very small group, and those people may or may not use the institution for their borrowing and savings need. So, I think part of it, Mary Beth, is working with and ensuring that community-based institutions have a voice in that process, that they're involved in it, so that when it comes time for these systems to be put in place, then there is actually community ownership, and the money stays in that community as opposed to, being shipped out.
And just a quick follow-up question. When you're looking at planning for a project that's being led by the IMF or the World Bank, are there preliminary discussions that happen about we know this thing generally works in this region, but we know these things about this country that might make us adjust a little bit in this way? Does that happen?
Yeah, absolutely.
Yeah.
In every place, they really try to understand what's really happening there that's different than in another place. So, I mentioned about gold, how people save in gold a lot in Myanmar. I haven't been anywhere in Africa where they save in gold like that. It just doesn't happen. It may, some, but it's just not totally different cultural context and so forth. So people, although they're taking lessons, maybe on mobile money or other things from another region, they do try to adapt it a lot to what's happening there. Any other questions about jobs and getting started? Yes.
So I'm graduating in May of this year, and I really want to stay. Thank you.
You're not there yet, but also
No.
congratulations on it.
Yeah, I'm majoring in economics, and I want to stay in Madison. So I was wondering if you had any recommendations for financial institutions that are really stellar to apply to, or just any advice for
this one here, I'm not saying that just because you're UW. I know some of the people that work there and the CEO and so forth, and I think stellar.
Mm-hmm.
Not good, but really stellar. I think it's a fantastic organization. Summit Credit Union, I'm a member of Summit Credit Union. I think that's a great one too.
Mm-hmm.
There are some research organizations in town too. There's one called the Filene Research Institute. So they have some really great people that work there as well. Cooperative organizations, there's a cooperative network. So Wisconsin does have a really deep connection to co-ops. You're not going to find it in Minnesota, but you go to Missouri, Iowa, Illinois, it's just not there. Any other questions? No? Mary Beth, back to you.
Sure, wrap up? Well, yeah, I'll just come up for a moment. So, we're really grateful, Dave. This has been really informative, I'm sure. I hope you guys felt like you gained something new on the world of different types of careers and work being done in your general discipline. I did, and I know that we really hope that this connection will continue and we'll keep expanding on what we might be able to do together with this kind of expertise in Madison and the Center for Financial Security in our undergraduate program as well. So it looks like you're putting your email up there, so that suggests that you're
Yes.
open to people contacting you.
I am.
Yeah, and so I guess stay in touch with Dave, stay in touch with us. Please provide feedback to Linda. I hope that she'll get a chance to get that from you, and feel free to let Dave know if you have feedback too. I'm sure you're interested in that. So let's give a round of applause for this.